Is the IPO dead? For over half a century, going public on the stock market has been the ultimate goal for a company. Not only does it allow them to raise a ton of money, but it also gives them access to the world's most sophisticated investors. But something funny is happening. Companies are staying private longer than ever before. In fact, the average age of a company at its IPO is skyrocketing. It's almost like companies are purposely avoiding the stock market. So what's going on here? In one word, money. Private equity. Venture capital and sovereign wealth funds are sitting on a record amount of cash, and they're reusing that cash to fund companies. 4 years on end without the hassle of an IPO. Less regulation, no quarterly pressure, and more control. That's why so many companies are staying private. Let's take a look at this in more detail. Firstly, there's less regulation. Public companies are forced to disclose their financial results every quarter to a myriad of regulators and shareholders. This level of scrutiny can be extremely burdensome and time-consuming. Private companies, on the other hand, don't have to worry about any of that. They can take their time to prepare their financials, and they don't have to worry about upsetting any investors. Secondly, there's no pressure to hit quarterly earnings targets. Public investors demand that companies grow every quarter, and that can put a lot of pressure on management to hit unrealistic targets. Private investors are much more patient, and they are willing to give management some slack if they do hit their targets. And thirdly, founders typically have more control over their companies when they're private. When you go public, you have to give up some of your control to appease investors. Private investors are typically more hands-off, and they're willing to let founders run their companies the way they see fit. So it's not surprising that so many companies are choosing to stay private. Some of the biggest startups in the world have chosen this path, including SpaceX, Stripe, and even unicorns like Airbnb, Fanatics, and Plaid. There simply isn't much need for these companies to ring the opening bell on Wall Street. When they can get billions in private funding, this shift away from the IPO has some pretty big implications. For one thing, it means that the companies that are going public are typically older and more mature. This isn't necessarily a bad thing, but it does mean that investors have to be more selective about the companies they invest in. After all, when a company goes public, they're giving up a piece of their future for a lump sum of cash today. That makes it all the more important for investors to make sure that they're reinvesting in a company that has a bright future ahead of it. The bottom line is that the IPO, as we know it, is dead. Companies no longer need to go public in order to grow, and investors are starting to take notice. This is just one more sign that the world of finance is changing and changing fast. And if you want to stay ahead of the curve, you need to keep learning. That's why you should subscribe. We cover a variety of topics from investing to business to economics and everything in between. Our goal is to help you become financially free. And we do that by teaching you the skills you need to succeed in this ever-changing world. So if you want to stay ahead of the curve, I highly encourage you to subscribe.